Well, the Infosys numbers that we've been waiting for flashing on your screens. Rima Tendulkar joins us now with the first cut. Rima, the numbers out.
Thanks so much for that. And there is a big margin beat. Margins have expanded by about 150 basis points, close to that on a quarter-on-quarter basis, much higher than street expectation. The street was penciling in about a 40-50 basis points margin expansion, but at 21.5%, this is a good 100 basis points higher than street expectation. So there is a big beat coming through on the company's margin performance. In terms of the rupee revenue, well, it's largely in line with street expectations. The company has clocked in a 6% quarter-on-quarter rupee revenue growth, but due to the margin expansion, the company's, the profitability has gone up by close to about 12.3% on a quarter-on-quarter basis. Okay, this is the big news. FY23 constant currency revenue growth guidance has been raised by 100 basis points at the lower end. The new guidance stands at 15 to 16%. Earlier guidance was 14 to 16%. So they're basically tightening the guidance. At the upper end, it stays the same at 16%, but the lower end of the revenue guidance has been raised by 100 basis points. The new guidance for this year is at 15 to 16%. Two parts. One, this comes in as a big positive surprise, and it should allay street concerns. Everyone was worried about slowing demand due to the volatile macro situation. But after HCL Tech, this is Infosys, the second large IT company, which has gone ahead and raised the revenue guidance. Secondly, the fact that the revenue guidance is now tighter, which means that the company is very confident. Why do you give a large 200 basis points range, right? The earlier range was 14 to 16% because you never know how things play out. You want to leave yourself that buffer. They brought down the range to 100 basis points, which is indicative of the fact of the company's confidence and how sure they are. They don't need to leave that kind of a buffer. Okay, now let me, there is a margin guidance as well. The FY23 EBIT margin guidance has been revised to 21 to 22% versus 21 to 23%. Okay, so the margin guidance earlier was 21 to 23%. Now they're saying it will be 21 to 22%. It should not come as a surprise because last quarter, after Infy's margins missed expectations, Salil Parekh very clearly said that for the full year, our margins will be at the lower end of our range of 21 to 23%, which means street expectations were anyway close to 21.5%. So the company has tightened the margin band. So this the upper end has been brought down, but I don't think it should cause any nervousness in the street. This is exactly what we saw in the case of HCL Tech. Both HCL Tech and Infy have pretty much raised the revenue guidance, at least at the lower end, and they've tightened the margin guidance. So that is a positive. Okay, there's one more important internal that we would like to talk about, and that's the buyback. The company's buyback size is 9,300 crores. At a price of 1850 rupees per share. 9,300 crores at a price of 1850 rupees per share. The stock closed at 1490, which means we are looking at an upside of nearly 30%. That's a 30% premium to where the stock closed. This will be an open market buyback. Maybe over here, the street is a bit disappointed because a lot of analysts and market men that I spoke to said that maybe this time, Infosys could do a higher buyback. Street expectations, I think IFL was at close to about 10,000, 11,000 crore rupees. So the buyback amount at 9,300 crore, maybe just a tad bit lower than market expectations, but it makes up by the premium, a 30% premium. 1850 is the maximum buyback price, and that's a good 30% premium to where the stock has closed. Let me quickly recap all the numbers that have come through from Infosys, and then we'll invite our experts to give their take on the numbers. Infosys Q1 revenues in line with expectations, slightly lower actually. It's come in at 4% versus expectations of 4.5%, but there is a big margin beat. Margins have expanded by 140 basis points on a quarter-on-quarter basis, driving a 12.5% increase in the profitability. So in Q2, there is a margin beat. The revenue guidance has effectively been upgraded. The company is now expecting revenues for FY23 to be in a range of 15 to 16% and margins to be between 21 to 22%. Buyback has been announced, an open market buyback of size 9,300 crore rupees at a maximum buyback price of 1850, which implies about a 30% premium to where the stock is closed.